Hey guys, what's up? Very important video if you're trying to improve your trading. If you have watched our prior few videos in the last 10-20 days, you should remember this slide right here. Basically, JP Morgan just 2 days ago says, hey, it's too late to sell, stay bullish. We cannot go and drop any much more from here. And sure enough, 2 days after that, Dow is down another 1,000 points and some of our traders are locking in some healthy gains. Now, why is that happening? Well, and the question is, more importantly, if you are watching too much news, could you be missing out on some killer trades and how you could change that? So in this video, we're going to demonstrate trader 1, trader 2, trader 3. More importantly, we're going to talk about correlations, okay? Correlations that can put substantial amount of money in your trading account if you understand thoroughly what to look at and how things are related. I'm going to give you a few examples about correlations. But the bottom line, the main purpose of this picture here is when you listen to analysts on TV, not only 90% are going to be wrong 90% of the time, but the fact that they are not traders. This person right here, she's not a trader. Okay, and I can give you ton and ton of pictures of similar traders. It doesn't have to be a woman, most of them are guys, but the point is the same, okay? They're talking about their overall view in the market. When you trade, your trades have to be specific. They have to be based on short-term correlations and movements in the market. And that's what 13 market moves help you figure out. So if you simply have an outlook on the market, well, you know, market's going up today, market's going down tomorrow, market's going down again, market's going up again, there's no way you will get any sort of clarity about how you should be trading today, how you should be trading the open, how should you be trading the intraday, how you should be trading the last 2 hours of the trading session. You have to get really, really specific, and you have to pay attention to certain things if you want to evolve into a better trader. So in this video, I'm going to show you some examples, show you some cool stuff with an intent that you could grab a pen and paper and learn by writing some of these things, which could help you trade much better tomorrow. So while JP Morgan said, hey, you can't be selling stocks, well, we did exactly the opposite. We did sell stocks, and we sold them short by utilizing put options. So the guys that traded with me, pay close attention on that move 3-3 formation. This is exactly where JP Morgan was telling people, do not sell stocks. No, it's too late. It's too late to sell. And so shortly after that, this is what happened. So was it too late to sell? More importantly, instead of paying attention to what the media is saying, how could you have known that this was actually exactly ideal moment before a sharp drop-off would happen? So this is where we actually were entering our puts right here and right here before this major drop. And as a result of that, some of you guys made 80K, some of you guys have made more. That is just on trading SPY puts. Now, this powerful sequence that I have explained to you was based on certain catalysts and certain observations by 13 market moves. In particular, in the last 2 days, we already have a confirmation on this 3-3 sequence. So this move 3 on Monday is still yet to materialize, but the point that we've got such a bearish sequence of 3-3 already shaped, it gives you pretty solid trading foundation on a day when you can determine the move before it actually happens, right? And so this is where our trading alert comes in. You would have known exactly on June 9th that this was the time to start trading because the market's been sideways for a while. This was the time to actually pull the trigger and go heavy on your positions because of this solid sequence. So let me bring some light here about how you actually would combine the whole flow of things, how we do here at 13 Market Moves. So instead of focusing on what they're really talking about in the news, number one, you should be focusing on the chart. In order to do that, you have to have basic understanding of what to look for on the chart. Number two, you have to look at the 13 Market Moves sequence. Combine these two things together. Number three, you have to target the specific catalyst. Number four, you absolutely have to understand how things are correlated in whatever is that you're looking to trade before you actually will place your trade after analyzing all these things. So speaking about correlations, guys, they're highly important. This is the area probably most overlooked by a typical retail trader. So the most common mistake a trader would do is like look at just overall at the market for the standpoint of things going higher, things going lower. If the stock is going higher, well, I should be buying calls, right? Wrong in most of the instances. Well, the market is dropping. Should I be buying puts? No. In most instances, if you buy put at the wrong time after the market has made a move, okay, you're not going to be very successful in a lot of instances. So the best trades will actually result from studying and understanding correlations, guys. How does a particular part of the market, whether it could be a market overseas, in Japan or India or England, could be something happening that could either have a positive or negative correlation on the market here in the United States. We can take a look at a specific sector and we see how certain sectors are interconnected and interrelated, commodities and so on. So we can take a specific thing that is happening in one part of the market and analyze how does it actually correlate with another part of the market, with a particular stock, with a particular commodity, and so on. And based on these correlations, we can figure out some solid trades. Now, all of that comes after you've studied the charts, after you've identified the sequence, after you've identified the catalyst. That's the time for you to actually understand the correlations before you place your final trade. Now, the most overlooked area about correlations, most of the guys that start starting the correlations, they misunderstand the most important thing. Now, correlations is not something that is there 100% of the time. In certain times, correlations are going to be greater. In certain instances, they will be fading away. And in certain instances, a positive correlation where things move together in the same direction could actually turn into a negative correlation where temporarily things are just out of place. And oftentimes you hear me use that. We call it a divergency, where things normally supposed to go in the same way. All of a sudden that correlation is broken and now things are falling apart and things are going exactly the opposite direction. So there are times in the market where certain correlations, I'm going to give you some examples in a second, they're playing out so precisely that as a trader you simply cannot afford not to take advantage of them. But where your 10x and 20x type trades are going to come in, guys, is where you observe the market and you observe the shift in the current status quo of a normal correlation. So if things normally supposed to go higher when something happens and all of a sudden they're not, okay, this could be a shift in the normal correlation. And during those shifts, this is where your options pricing, they're going to be mispriced. And so this is where you actually make the money, because it's not apparent to the market participants yet that that shift has already taken place. And by realizing that and acknowledging and taking action on ahead of time, this is where you come ahead as a trader. And this is probably the most important condition when you're trying to put together a 10x or 20x type trades when we look at trading weekly options with 13 market moves. So a couple of examples. What is a correlation? Well, for example, recently lots of talk about sanctions and so on. Well, how, for example, does a situation where sanctions being placed on Russian titanium, how does that impact any particular stock here in the United States? And so if we're to look at this event, the catalyst would be sanctions on Russian titanium. In your opinion, could you pick out one stock that you could go long, one stock that you could go short based off that information when we had that catalyst? I'm going to show you a quick example, nice and easy. Or it could get a little bit more complex, such as inflation rockets higher. Well, if inflation is higher, well, you would think dollar value would go lower, right? But that's not what's happening right now. So how am I going to have high inflation, stronger dollar? Okay, how does that work? That makes no sense, right? So how do you actually trade this information? So in this video, I'm going to break down specifically trader 1, trader 2, trader 3, how they traded the information that was given to them by 13 market moves and the outcome of that. But we're going to get into specifics of this inflation situation, correlation to the dollar, and what is one of the simplest trades that you could have put together in the last few days. So The first question, I'm going to just give you a quick answer real quick. So sanctions placed on Russian titanium. Simply, guys, you short Boeing. We've been sending you some Boeing puts since it was about 200 recently this year when the titanium sanctions came out. I mean, it was still close to the 200 level. Now Boeing is at 120, guys. That's over, it's close to the 50% drop in the stock. I mean, 44%. I mean, this paid huge in some of the options. If you trade with me personally, you know I've given you some very successful trade that were associated out of the catalyst right here. Okay, but they didn't just come out of the catalyst. Remember, there's always 4 parts: chart, sequence, catalyst, correlations. Then you place the trade. Okay, so that was easy example there on the simple correlation, how things outside of the United States could actually impact a domestic airplane manufacturer. Okay, so gold and USD correlations. So generally, when we're looking at the chart of gold here in the 80s, generally speaking, when dollar moves higher, gold is supposed to drop. Okay, so you've seen this major move lower in gold right here. If I show you the next chart, you'll see that during the same time, dollar was rocketing to the moon. Now, this particular part is a shift, right? It's a period of a divergence. So normally, the stronger the dollar is, the weaker the gold is in relation to the US dollar. But here, there was a time of about 7 to 8 months where gold and dollar were moving in the same direction. So understand this. This is not normal. We're talking about correlations, right? Gold and dollar would typically go in the opposite directions. If one is dropping, the other one would go higher, and the other way around. But that was an exception. This was a time period where the correlation between gold and USD was extremely strong. They were both moving higher. Understand that this was only a short period of time. This is not normal. So when I was referring to in the prior slide, I'm saying, look, some correlations, they're not going to be 100% there all the times, and sometimes they're going to shift. And so this is the pivotal moment right here to those that understood that, hold on, temporarily we could have a shift in the correlation between gold and USD. There was a ton of money because it was highly unexpected, right? Most of the traders that look at what is a typical correlation, they may acknowledge later after this is already in place that, hey, hold on, this correlation has already shifted. And it's clear now gold and USD move in the same direction, but it's by that time it could be too late to profit from this. So it's important to understand that correlations are there. Your best trades are going to evolve once you realize, hey, there is a shift right here in a typical correlation of the way most of the traders would look at this normal correlation. So take a look at this shift in normal correlations. This is the time frame in USD, same time frame, right? We're looking at 82, 83, where on the prior chart, you saw me showing that gold was moving higher, but at the same time, you can see clearly here that USD was also moving higher within the same time frame that gold was moving higher. So highly unusual, but there are going to be instances where the market is going to do that. Take some notes on this. Let's move on to the current situation. Recently, what have we had? And by the way, historically, if you look at the 1982, 1983, right, that's Paul Volcker times, where what did we have? We had high period of inflation, which is similar what we've got right now. And we were looking at Federal Reserve, Paul Volcker, some of the most impactful federal interest rate hikes in the history of Federal Reserve. So you've got a pre-existing condition here that we've got right now. So gold has been dropping. The normal correlation is what? Gold is dropping. What should the dollar do? I just explained this to you guys. Dollar should be moving higher. You see, if we're to try to catch a part where you could see both charts. So basically, you see that while gold was dropping, USD was moving higher. Okay, but notice what happens recently. Recently right here, got a strong pop in gold at the same time while dollar is moving high. So we have this, one of the rare circumstances, right, where you have gold and dollar moving at the same time. It doesn't happen often, but again, this is not a normal correlation. And this is where you would actually have an awesome opportunity to profit. So let me show you. I'm going to show you 3 charts right now. I'm going to ask you a question. I'm going to do this so guys, you can learn from this video. So the truth is, you can go watch a bunch of other videos on YouTube where people just talk, just generally. You're not going to really learn anything. So the idea of this video, I'm going to show you these 3 charts. I'm going to ask you a question. You can pause the video if you're really trying to study this and answer this question before I'm actually going to give you an answer. So there's 3 charts right here. Now this charts, we're zooming in, right? I showed you the 1980s chart. I showed you the recent chart. Now we're zooming in at a specific time frame that has just transpired. Now we're looking at gold futures. Gold futures, June 6th through June 10th, 2022. This is your 5-day chart, 5-day, 5-minute chart. Next chart. DXY, which is basically dollar, June 6th through June 10th, 2022. Here's the chart, 5-day, 5-minute chart. And the final chart is you have S&P 500, June 6th through June 10th, 2022. So now you got 3 charts. Okay, if these were the only 3 charts you had in the market, how would you trade it? Specifically, what would you do and when you would have done it? Now, clearly, we have actually told you, if you're part of the alerts group or you're working with the 13 Market Moves coach, we gave you those trades way before the charts actually look like this. So by actually showing you these 3 charts ahead of time, I'm kind of making the job easier for you. But the idea is not just to see what you would have done clearly based of what the chart looks like at this point, but do you see the correlation and why would you be doing this? So let's take a closer look here. So I'm actually going to show you some of the alerts that we sent out in the last couple of days as you go. Now, clearly, if you've shown the video, the whole point of the last couple of videos was to let you know how important it is to set up your futures, because biggest market moves are going to be happening outside of market hours, such as the 8:30 CPI number that we had on Friday morning. See, that move was happening outside of the market hours. If you don't have futures accounts set up, you're not able to trade options or futures before market open. So review some of the last few videos if you're trying to get better understanding on this. But here's the correlation, okay, between the latest correlation on the prior 2 charts, the S&P 500 and the dollar. The latest correlation is dollar moves higher, the markets drop. So if you understood that correlation and you understood our projection when we posted that video saying, hey, it's a 3-3-3 move, by understanding what a move 3 is, which is a gap down and a drop, okay, we told you that there is going to be a sequence of this situation. And so the next morning we drop again. Now, while the market is actually, and it's not just a drop, right? In the move 3, you're going to gap down, and at some points the market could try to bounce, like clearly you can see right here, but these bounces are your best friends as a short seller. This is where you actually buy puts, where a lot of the traders are inclined to be buying calls. But understanding that overall it's a move 3, it allows you not to panic when the market bounces. It allows to help you stay on the right side of the market overall, where the market is going to move throughout the whole day, not just where the market is moving for the next 5 minutes or next 10 or next 15 minutes. So clearly, if you're part of the alert group, we told you, okay, to buy 397 strike Monday puts, and we told you to do this right here, guys, before the drop, before the big slide lower began. Okay, and the next morning I basically told you, hey, we got a confirmation on the 3-3 sequence, okay, and we're in good shape to go Monday. A lot of you guys are going to make a ton of money. If indeed tomorrow, I'm recording this on a Sunday morning, if tomorrow indeed is going to be a move 3, which based off the sequence, there's a good chance. The only part we don't know exactly, right, if it's going to be a small gap down, if it's going to be a large size gap down. I personally think we can easily get down to 38.50, 38.60 area when the futures open for trading Sunday at 6 p.m. We're yet to see that. In any case, we could still be very well positioned for a good size gap down in the morning. So a lot of the SPY contracts should increase the value further. Now, the dollar keeps rocketing higher. And I basically said, as long as the dollar keeps rocketing higher, what does that mean based off the recent correlation? So recent correlation is such that dollar moves higher, what happens to the market overall? Market drops. So basically told you that in the next few days, not just Thursday, not just Friday, right? In the next few days, there's an elevated probability, and I'm going to show you where you would have gotten that information, that dollar will keep rocketing higher. Now, clearly, the inflation report is confusing because, oh my God, well, inflation is higher, dollar should be dropping, right? But that's not the case. What most of the traders miscalculate, the dollar is not dropping because high inflation means Fed has to absolutely increase the rates further and possibly in a more aggressive way after the CPI number. So write that down. Interest rates higher means stronger dollar, not weaker dollar. Okay, and that is not normal because you would think exact opposite of that. And again, that correlation could be changed at some point. In 1980s, they had to artificially devalue the dollar because they kept rising rates and the dollar just kept rocking and rocking and rocking higher to the absolute moon, like 150s, 160 on the dollar index. So basically, understanding that technically inflation should make the dollar lose value, okay, but keeping out the interest rate component and what the history have told you in the 1980s, if they keep raising the rates steady, the dollar value is actually going to increase. Now, what do we know about the dollar? If dollar keeps moving higher, what happens to the market? As of recent correlation, now that's not a steady, always 100% of the time correlation, but as of recent correlation, okay, dollar moves higher, the market drops. So that gives you a high outcome probability, especially when we're looking at the 3-3 sequence, that hey, there's a great chance the market is going to keep dropping lower. Now, it doesn't mean like, okay, on one day it can't stall and can't have a positive day. We're just talking here overall, the overall trend. If the dollar keeps rocketing higher, the market is actually going to keep dropping lower. Now, it doesn't mean that there's going to be no green days. It doesn't mean that, and the market is not going to pause the drop. As you can see, it doesn't just drop in straight line. Here's drop, sideways pause, drop, sideways pause, further drop, sideways pause. All right, but overall, where's the direction? Well, overall, the direction is lower. So let's move to the next part. Next, what you want to do is you want to look, okay, well, we know what the general correlation has been. So can we confirm it on the chart, right? So first, you guys, you should be looking at least 50 charts a day. Guys ask me all the time to train me, Leo, what do you do? Well, you start with looking at charts. Okay, so if currently maybe you're looking at, at the news, you should just turn the news off and you should start looking at charts. It's the weekend, guys. There should be no reason why you couldn't look at, 100 charts. And bear with me, this is very important. That's why I want you to understand this, because we're going to get to the fun part in just a second where I show you the trades and the traders and so on. So what's happening with the dollar chart? Well, we're getting a 7-7 move. How would you know it's a 7-7 move? Well, if you look at the 1-day, 1-minute chart, you keep track of the moves, and you understand the 13 market moves, you would have known that. So basically, we have a solid confirmation on the correlation. While S&P is doing a 3-3 move, we're getting a 7-7 move on USD. All right, so everything is perfect here, right? There's no way, okay, you could be looking at USD, understanding the correlation, dollar moves higher, market drops. There's no way, okay, you would be doing this. There's no freaking way. Let me just get really specific here. There's no freaking way, okay, anytime the market would try to bounce, there's no way you would be buying calls. Understanding this correlation, dollar high, market is a 3-3 move position, and dollar is a 7-7 move position. And okay, when the market bounces, you feel like you want to buy calls. There's no way you would have done that. All these bounces, there's no way you would be tempted to be buying calls in any of these situations. All right, so 3-3 as a solid negative correlation with USD 7.7, which is a highly bullish move. So 7.7 sequence on the VIX, right? You're looking at the VIX, yeah, it's been dropping, but now look at these two 7.7 moves back to back. Now, if you've studied the 13 markets move formula, you know, man, if we get another 7, I mean, the market can entirely fall apart here. And that's why if you watch the prior video, I've given you a target on the market at 36.56 on the S&P 500. So we're at 39 and some change right now. I mean, we could still get another 250 points. When this week, when the trader, you cannot be just generally speaking, like a lot of these analysts, you cannot be saying stuff like, well, by the end of the year, our target is blah, blah, bullshit. That's not going to make you any money today. That's not going to make you any money tomorrow. That's certainly not going to even make you any money this week or this month. What's the year-end targets got to do with anything when you're trying to trade today, tomorrow, when you're trying to figure out the market move and sequence over the next few days? That's what gets you paid. So understanding how these sequences work. So if we get another 7 on the VIX, which we could easily get tomorrow when the market opens, Monday, the 13th, after 777 sequence on the VIX, look at some of the other components of the chart. I told you the first thing that you want to do, right, is you want to look at the chart. And you would know that if you studied our charts diverse course, like this is highly bullish. Look, the MACD is about to make this bullish cross to the upside. This is bullish, okay? This VIX could take off running higher at any given moment, especially after a 7.7 day, okay? All that coincides with what? We've got almost an identical picture, even though this chart looks even more bullish, the chart in the USD, you've got already a bullish cross that has just happened here on the MACD that most instances would indicate a move higher. A move higher up till how many points? You should be asking this specific question. Well, recently we were just not so far ago at like a 105 area, 104.95 or so. So could we first get there? Absolutely, which would mean that we're getting a 777 move on USD as well. When we're getting a 777 move, if you understand the 13 market move formula, normally after a 777 move, you could have a number of positive days for the underlying, such as USD or VIX, that are actually making the 777 move. It doesn't mean you're going to get another 7, but it does mean it could be followed by another sequence of green moves, such as a 7, an 8, a 1, and so on. So you could have a continuation. So in other words, we can have a breakout, or at least a temporary breakout in the dollar. So if we're getting a 7 move on the dollar, if we're getting a 7 move on the VIX for another day, it increases the probability of a move higher in both VIX and the dollar. So how do you actually use this information, everything that I've just shown you, to put on a specific trade? So this was Friday morning, just after 8:30 in the morning. So this is Friday, June the 10th. I'm going to show you specifically how everything I explained now is being put into a trade. I've shown you the charts, I've shown you the sequences, okay? I've underlined what is the catalyst. So we've looked at the chart, we've looked at the sequences. What is the catalyst? Well, the catalyst is the 830 CPI number, all right? And then, if you watched a lot of my other videos, you should know that we always want to trade in the opposite of the initial reaction. So here's the 830. What do we get? We get a bounce in gold, right? Naturally, right? What do you think? Man, well, high inflation, boom, okay? The initial reaction is higher on gold because generally it is considered to be doing extremely well in periods of inflation, okay? But you don't want to just necessarily jump in right here on the call side of gold. So the first alert I'm sending you is this. You want to short gold on this bounce. So the first trade I'm sending you is this trade. If you're trading with me one-on-one, you know we're shorting gold. Exactly the opposite of what you would think, right? We're shorting gold. We're shorting gold on this bounce. So this bounce to 1840 $47 right here. This is where I'm giving you a trade to short gold. All right, and then I say some basic stuff, right? Just focus on GXY, which is USD. All right, keep things simple, okay? This is what's really going to happen. Higher dollar means higher dollar means the market is going to drop. So therefore, all of the puts that we're buying from prior day, I told you to stay with the puts and keep the SPY puts that expire Monday. We've cashed out of some to raise some capital for other trades, but overall, we're not changing our mind, okay? We're staying, dollar moves higher, we're staying higher, we're staying low with the market, and now we're trying to put on this trade on gold. So normally, dollar moving higher would mean what? Based on the general correlation I explained to you, normally gold would move lower. So this is the first part of the trade, boom, right here. The first part of the trade, we're shorting gold. Now, let me show you exactly what transpires. So trader one, okay, trader one, and this is about the importance of how I can give you the same information. One trader is going to result with a totally, entirely different outcome. And it all boils down to this: how committed you are, how prepared you are, okay? Are you wasting time instead of following and doing exactly what our strategy is for that day? So trader one, as you can see, I sent a message, hey, get 10K, 1840 gold puts, and I'm telling him to do it right here. So notice what the guy says. So apparently he's saying, I got $9,700 available to trade. I'm like, okay, I'm giving him the trade. Get 10K of 1840 gold puts. And notice what he's doing. He's not in a rush to execute the trade, all right? Like 2 minutes go by, 3 minutes go by. Look at what happens. I've given the trade at the top right here. Over here, this guy is still asking questions. I'm like, dude, you should be up 4K by now, right? And he's talking about, well, do I want him to put 9,700 in the trade? Do I want to, he's asking questions instead of focusing. Look, when you sign up with 13 Market Moves Coach, there's nothing wrong with asking questions. Just don't do it when the market is moving. Don't do it at 8:30 when the CPI number is announced. Don't do it at 8:45 when things are moving while the whole market is moving. This is the wrong time to ask questions, damn it. You execute. You sign up to trade with the 13 Market Moves Coach. You'd better execute as lightning fast as these trades are coming. You should know when to execute based off market price. You should know when to put an order at a limit price. I've been telling you all this information, okay? You would know all this information if you're trading with the 13 Market Moves Coach. The only way you wouldn't know this if you weren't paying fucking attention. So pay attention now. So he's basically talking. Instead of taking the trade, things are moving fast, he's still talking. Well, a few minutes later, he's like, well, look, now between 8:46, where he should be already in the trade, look, now it's 8:51. It's 5 minutes go by. 5 minutes in terms of same day option expiration, guys. It's like years. It's like 5 years in regular life. Okay, so you can't be, 5 minutes go by, the dude is still not into the trade. I'm like, hey, what's going on? And here's trader two. Trader two, while the other guy is talking, trader two nailed the entry. I gave him the trade. He is in 1840 puts. While the guy is still trying to take the trade, this guy is up 13,000. Okay, trader three. I got him slightly in a different strike because it was moving. He actually didn't have as good of an entry, but in 1835 strike puts right here, you can see this. He's in 1835 puts on gold. He's got 30 of them. 12.9. So trader three is making 12,900. Trader two making over 13K. All right, trader one still trying to figure out why he can't place the damn trade. So trader one, look, this keeps going. Guys, you cannot sign up to trade with 13 Market Moves Coach, get certain instructions, Okay, Mike was in particular signed up this guy. So I'm like, hey, did Mike not tell you? At this point, I find out, like, look, there's like, this is a waste of time. I shouldn't be asking you. We shouldn't be messaging back and forth. I mean, the market is moving. Why are we wasting time on this bullshit? Okay, I'm telling him, look, try to execute fast. All right, he apparently, what happened, the guy finally admits, I don't have my option, I don't have my futures account set up. How serious are you about trading? The last 5 videos, I've said nothing besides like, listen, it's a 333 move. You'd better have your futures account set up. Let's go. How can you not have your futures account set up? How could you be dealing with this shit on Friday morning CPI number? That tells me this guy, he didn't pay attention to what I was saying in the last few videos, okay? He didn't, clearly, Mike told him to clear all his positions, so he's not just trading with 9,700 bucks, he's got kind of like over 30K, and he's just being cautious. Guys, if you want to be cautious, fucking don't sign up. You already know where your strategy has gotten you, all right? And your account is not over 500, a million. Your account is certainly not over 5, 8, 10 million like some of our trading guys. So if you're not there, when you sign up to trade with 13 market moves, you'd better fucking listen. You don't send me a bunch of bullshit. Just get the shit done, okay? So Mike told him, if you sign up, clear all your positions. I don't want to be dealing with the positions that you've opened yesterday. Okay, if you got emotional commitment, if you got your own strategy, you reserve for that, I don't want to have anything to do with these trades, all right? I want to focus on what we're doing today. I don't want to be worried about, oh, you still haven't closed your position from yesterday because of this or this. You're going to call, you're going to talk to a coach here. They're going to tell you to clear all your account positions. If you want to trade your own trades, do it on another account. But let's focus here. You're signing up for coaching. You're signing up for a program. Let's clear all this stuff out and let's focus on fresh trades. So I told the guy, we want to start fresh and rock. Should be no emotional attachments to the old trades because that's going to mess with his psychology. Many guys don't understand, well, how can that hurt? Let's just take some trades with you. Guys, that's not a 100% commitment. I mean, you called in, you sign up, you know, the coach tells you clear up your trades the day before and you still haven't done it? You still haven't set up your futures account? Like, what are you doing? You're not taking this shit seriously. So, basically, to help you understand the trade further, we switched the trade from gold puts into gold calls right here. So we got into gold puts right here. We've collected the profits on gold puts right here, close to the bottom. We didn't collect right at 1830, but like 1832, 1833, 1834 area right here. This is when we sold gold puts. And I waited for a couple of confirmations. When I saw the strong volume between 1833, 1836 area, we started buying gold calls right here. So understanding that, hey, this is the normal correlation. Dollar goes higher, gold drops. Trade in the opposite of the initial reaction. So this was the first part of the trade. It was done. Okay? Looking at the chart also would have helped you understand that this also coincided, or not far from, a general area of recent support in gold. And also knowing that in the history, there was a time interval where gold and dollar lose their typical correlation, would have allowed you to switch directions here at the proper moment. So that's exactly what we did. So now we're in gold calls. Okay, now I'm telling everybody to be buying 1900 strike gold calls. If you're trading with me personally, we're all buying gold calls. So Trader 2 now closed out his gold puts, and Trader 2 now is up 55K. This is not gold puts, this is calls. He's now in 1845 strike calls. We're in calls on gold. Now Trader 2, who was prepared, no text messages about any issues, problems, all this stuff. This guy, what is he doing? He's focusing on executing the trade. That's it. That's what we do on Fridays. We focus on execution. 1 minute difference could be a difference between you making 55 grand or missing on a 55 grand trade. So he got in right here. He got out right here. Okay. He got back now in the total opposite side of the trade on gold calls. And now he's in it. This is what Trader 1. Trader 1 still cannot trade gold calls. He cannot, because his account is not properly set up, which he should have had done ahead of time. And we're starting to take some other trades. And at one point I tell him, as I told my other guys, to add Tesla puts. And Tesla puts is a bad trade for the day. It was a good trade from the day prior, because we're buying like 715 strike, 720, 690 strike. And so Tesla Thursday drops 40 points, then it drops another 40, 50 points. So at this point, depending on when your entry was, it was a good trade. Well, the entry here was not perfect. When the stock bounced, I'm telling this guy to add puts, to add more puts. And this is what he says: I don't feel comfortable. Leo, I don't feel comfortable. Guys, you don't come here to trade with 13 market moves to be comfortable. Let's get this shit straight, okay? You want to be comfortable? Do something else. Go trade with somebody else. Be on your couch. Do whatever the fuck you're doing now to trade, as long as you're comfortable. If your goal is to be comfortable, just keep doing whatever the fuck you're doing right now. But you already know how that worked for your account. So I don't want any guy that want to be comfortable trading with me. You're not going to be comfortable. As a matter of fact, the number one priority as your coach, anyone here at 13 Market Moves that you will trade, their number one priority is to make you feel uncomfortable. Because that's the only way you're going to be able to shift your trading from where it was, okay, to actually becoming a better trader. Trading should not make you feel comfortable. Adding to a position when your trade is against you should not make you feel comfortable. The question is, okay, are you 100% committed to our strategy of the day? It's a move 3, damn it. It's a move 3. On move 3, we don't fucking buy calls. What we do is we short the bounces. So if you want to be comfortable, by all means, go watch the news. Now, if you want to grow your account, okay, make sure you understand when you sign up to trade with 13 Market Moves Coach, there's going to be a lot of times when you're going to be uncomfortable. And you should be ready, and you should be prepared for it. And you should be feeling uncomfortable if you're trying to get better. Anything. It doesn't have to do with trading. Anything, you want to start a business, but you're sitting on the couch on your ass. There's no way you're going to start a business. There's no way you're going to do anything. Your life is going to be the way it is right now unless you will get uncomfortable. So this is Trader 2 now, who didn't give a shit about being comfortable that day. Now he's up $75,000, and actually that's just on gold calls. And actually that's not an entire position, because we've started scaling out a little bit, because our target on gold was 1872 was our first target on gold for that day. And another target we had slightly higher that was not hit. And the options were running close to expiration. At that point, gold futures options expired at 12:30, so we had to make sure we're out of the trade by 12:30. So we started scaling out basically at 1872. We closed most of the positions at around 1874, 1875 area. So here's Trader 2 that is now up for the day 155K. Why? Because he didn't give a shit about being comfortable, because he had accounts set up right from the get-go, because he didn't argue with his coach, because he focused on what he's supposed to be focusing, which is executing, getting the best possible fill, lightning fast. When the market moves, we trade. We don't fucking talk, we trade. And here's Trader 3. He's up over, in this strike on gold calls, he's making 91,000. He's making another strike, another 44,000. So he's making about 140, 150K on gold calls altogether. The guy's up 266,000 for the day. Was he comfortable? Do you think he was comfortable the entire time? No, absolutely not. But that's what it took to get him to a $266,000 profit on Friday, June the 10th. So that's the trade. That's the difference, guys. If you want to trade, you have to give it 100% focus, guys. Recently, I posted a video about a guy who, started trading with me, and then the first day, he's down 30K, he's going for lunch, he falls asleep. He's like, you can't do that, all right? I'm going to tell you another quick story here because it's important that you understand what awaits you if you sign up, right? So this guy actually signed up last week, had about 7K in the account, and I gave him 2 trades and he didn't take them. And then he took the third trade. The first 2 trades would have made him 20,000, but he wasn't on board. He wasn't focused. He wasn't prepared. So he lost that day about $6,200, and so he ended up with $800. And so needless to say, the guy that just went from 7K to $800 now, he's going to be whining and bitching and crying, and he was. But I told him, look, man, I gave you the 2 trades that would have made you 20K. You didn't take them. Whose fucking fault is that? And so we were able to pass that, and we were able to get constructive again. I told him, look, we're going to trade with the $800. And so at that point, I'm not sure exactly what changed in his mind, but he decided to stay committed and do exactly what the hell 13 market moves told him to do. And so in 2 days, he was able to go from $800 to $30,000. All right, so this is his profit. You can see that he made $3,500 on oil puts with me. He's made $5,500. So the first trade on Thursday we took, he bought 397 strike puts on SPY with $800. I think he was able to get like around 15 contracts. And so he made $5,200. So his account went from $800 to like $6K. Then we took oil. We shorted oil. He made $3,500 on shorting oil with me, and utilizing options on oil futures. Then on gold, let's see. He bought 2 strikes on gold calls. And so he made $4,500 on this strike and $14,000 on this strike. So if you add up all these numbers, I mean, they basically add up to about 30K, less the $800 that he started with the day before. Now, at this point, okay, he gets a little bit overexcited. So as in the case with Trader One, he was questioning me, hey, Leo, do you really want me to put 10K in this trade? It's one trade and blah, blah. Guys, if I'm asking you to do something, okay, just do it. If a 13 market moves coach says, hey, do this, guys, understand, you're dealing with people here who have done it. We're not a YouTube channel, okay, that talks about, well, here's an article that come out here, guys, and this is what they're talking about. Well, here's a newspaper, and then they're just doing highlights and giving their opinions about stuff about other people's opinions. These are not real traders. We have done this, okay? If I'm telling you, jump off a fucking building, it's good for you, fucking do it. And you're going to be starting to ask a bunch of questions instead of jumping off the building. And basically, what that's going to get you, that's going to get you killed. If I'm asking you to jump off the building, it's probably because I'm looking at all sets of criteria, and that's the only thing that's going to save your life. So if I'm telling you to jump in the trade or jump out of the trade, don't be asking 100 questions out of it, no matter how ridiculous it seems. I'm looking at 100 things that you're not focusing on in that moment. I've done my homework. We've studied the sequences. We've done all that stuff. So if a 13 market moves coach tells you something that looks absolutely ridiculous, get excited about it, because chances are, if it looks so ridiculous, the trade to you or the trade setup, that's probably going to be the trade that could make you 100K to 100K that day. that could take you from 800 to 30K that day. That's the kind of stuff you should be excited about. And later when the market closes, you should be asking, well, why'd you ask me to jump off the building? How did you know it was going to save my life? It's simple, right? And you shouldn't be asking questions about it. Just get it done. We can talk at 4 p.m. when the market is done. So look at this. So this guy now is up from 800 to 30K. And basically, he gets a little overly excited, and I tell him, like, hey, I gave him the next trade, and instead of just putting 10K out of the 30K that he had, he goes in and puts everything. He puts whole 30K. I've never told him to do that, but apparently you would expect to get excited taking your account in 2 days from $800 to $30,000. And so at that point, the guy trusts me, he believes me, and even though I only told him to put 10K in this next trade, he goes and puts the entire fucking account in it. Now understand, I would not have you do that, okay? So as the result, that lost trade that would take ends up losing 50%. And so if he would have listened to me and only put 10K, he would have ended up with 25K. So literally he would have taken $800 to 25K in 2 days. But as a result, he puts his whole account, and so, you know, he ends up being at like 10, 11K. So huge difference. The point here, it's one mistake, right? So many perfect trades me and this guy take from 800 to 30K. And one mistake, just him just being too excited and again, not focused, right? I didn't send him a message saying, hey, put 30K in this trade. No, I said put 10K. So he goes ahead, puts 30K. As the result, one mistake like this, guys. All right, and he's back down to 10, 11K. So, and on top of that, look, he knows that, you know, hey, we got like 20 minutes to go here till expiration, and he's trying to freak out because, I mean, now he realizes, oh my God, well, there's a reason why Leo only told me to put 10K instead of 30K in this trade. And so now he's freaking out. He's sending me these emojis. These can be good. I don't know what this is, but I think what that can be good. The guy's probably sitting either crying or tearing his hair out. And he's like, well, basically he hopes we have another hour left in the futures. I'm like, no, we got 20 minutes. And at that point, the futures are doing this. They're bouncing. So he's freaking out. I tell him, look, stay. Do not jump out. There's going to be a sharp move lower, so we get a 30-point drop. The situation is a lot better. Otherwise, if he would have jumped out earlier, it would have been a disaster for this guy. After all this hard work, taking perfect trade after perfect trade after perfect trade, one mistake, guys, one mistake cost this guy like close to 20K. So he's still up over the trade between the 2 weeks, but nowhere as much as he should have. And where did it all start, guys? It all started when the guy did not take the first 2 trades I have texted him. And so be prepared, guys. You cannot decide which trade you should take, which one you should not. You have to take all trades, all right? There's a reason why when you trade with me, unless your account is super, super small, there's a reason why I'm not gonna give you just one trade, okay? Most of the time, I'm gonna give you 2 trades. There is also a reason why I'm not gonna give you 15 trades and try to risk manage every trade. Forget about it. That shit is not gonna work. So, we focus just on a number of trades. In most instances, it'll never be just one trade. And you have to be 100% on point. You know, if a coach texts you, hey, put 2K in the trade, do that. Don't ask why, how. At the moment, you can ask after 4 p.m. when the market is closed. There's nothing wrong with that. But don't be asking a shitload of questions in the middle of a trading day where the market is moving. That's the point. We'd be happy to answer any questions, guys. Not a problem. But not while the market is moving. You should be focused on executing. 1 minute could cost you a ton of money. It could cost you a ton of profits on a trade. So most of the time what happens is I give the guy a trade, and then the trade starts moving in certain instances too fast while the market is moving. And then He's like, oh my God, it's already down 20 points. I missed the trade. You're like, exactly my point. I gave you this trade 3.5 minutes ago. Why didn't you get in? Right? And then the second trade we take may not be as good of a trade. So you have to trade and not by, oh, whoa, this is one trade that didn't work. You have to look at it as a sequence of trades. The sequence of trades, not one trade. Look at it in a sequence of trades. We take 100 trades together. Okay, there's going to be some trades you're going to be losing your ass on. There's going to be some trades that are going to be phenomenal home runs. And a lot of it also depends what type of market conditions you have. Because again, sometimes correlations are strong. Sometimes they're at a pivotal point where futures are mispriced. You can do some 20x trades. In some moments, okay, the correlations are just fade and the market is sideways and there's just nothing going on. And so depending on what type of market you got to go after these home runs when the market is moving. And the last thing you want to do is show up unprepared, unfocused, when you get clearly a specific message, what you should be taking and executing. I mean, I've had stuff, even like guys mistyping ticker symbols. I'm trying to give them a trade on natural gas futures, which would be /NG, and some guy goes and buys calls on NG, the stock, which is like a $6 stock. And I'm like, what the hell is going on? So that person clearly never looked through other videos. He doesn't understand even the difference between NG stock symbol and /NG natural gas futures, which we would trade options on. So guys, one mistake, all right? This is not my mistake. This is his mistake. Understand, if you trade with me, okay, there's gonna be some of these situations. We have to correct them. But guess what's the best way to handle situations like this? Is never make these mistakes in the first place. And it has to do with you. So let's address this right now so you can be prepared for next week. So you may think you're 100% committed and prepared, but are you? The question is, if you think you're 100% committed to trading with the 13 Market Moves coach, the question, why isn't your futures account still not set up? Why is that? All right, and if you're already trading with a coach, George was telling me like, hey, I had a guy who just kept arguing with me. Like, I'm giving him a trade and he just, guys, stop it. Why are you arguing with a trader who has done it, who has taken a 5K account to 100K multiple times, who has taken a 100K account to 500, $1 million plus multiple times? Why would you argue? Okay, what are your stats? Okay, have you taken an account from 5K to 100K even once in your lifetime? So why don't you just, when you sign up, you just focus and you listen. And the most important critical component that you can do on your side to make sure that we are successful together is bring Navy SEALs mentality. All right, bring Navy SEALs mentality. All right, be strong mentally, be coachable, be ready to be a part of the team. We're doing this together, okay? Only Navy SEALs mentality allowed here at 13 Market Moves. All right, if you don't have it, okay, guys, you should go trade somewhere else. You should be a part of them goofy, what do people do? They sign up and then there's like a chat where they scroll and they talk between each other. Like don't be a part of that. Like, I know these guys that take their time to do that, they're not successful. They spend so much time chatting and sending messages while the market is moving. I know these guys are not making any fucking money. So don't be one of these guys. Okay, don't be sign up to some of these groups and sit there and communicate with other traders all day long. What is that going to do for you? Look at the size of your account. Have you taken $50K to $1 million? No, you haven't. So shut the fuck up and learn when you come to 13 Market Moves. Now, you may think that you're ready to trade with 13 Market Moves. You may think, just like some Navy SEALs that are ready, some guys that are ready to go be a Navy SEAL. Okay, most of them find out that they're not ready. You will sign up with the 13 Market Moves coach. You're probably going to find out that you're not ready. So, but here's some things to consider how you could improve before you actually make a decision to trade with a 13 market moves coach. All right. So number one, again, is the Navy SEAL mentality. But as far as the technical part, guys, you should study all the courses. All right. You want to be a Navy SEAL? 1,200 push-ups a day. Damn. Okay. Like, that's what they make them do. I mean, in the area of trading, I would say, take all the courses from 13 market moves, so you have an idea when you look at the chart, what is that you need to be looking at. So look at 100. So take all the courses so you can look at 50 to 100 charts a day, so you would know what the hell you're looking at. And when you're taking the courses and when you watch some of these videos, okay, take notes, guys. Guys that take notes will get better statistically much faster than guys that just sit and listen. I mean, if you're on your couch right now, relax, watching this video, guys, get up, sit at your table, take some notes. You should be able to spend your time wisely if your goal is to get better as a trader. Don't just sit there, take notes. Take at least a couple of pointers from each video that you can observe the market tomorrow. You could see, okay, I see now what he's talking about. I see like how I could have done this or I could have done that, and I see how I could have had a successful trade. All right. Point number two, don't come here unprepared. All right. Meaning, get your account set up. All right. This is not a kindergarten. All right. Where your mommy, daddy going to drop you off and you're just going to come out here and, have fun drawing shit with other kids. All right. Come prepared. Have your account set up for trading futures. I told you, if you're a real trader, okay, cash accounts don't work because you can't capture fast-moving markets. As a trader, you should be excited about fast-moving markets. That's what makes you the money. With a cash account, I would say you're like an 80-year-old grandma, all right, watching a TV show from 1950s. All right, that's what you are if you got a cash account. Correct that now. You don't want to be trading like an 80-year-old grandma. All right, 3, when you sign up with the 13 Market Moves Coach, don't waste time talking when the market is moving. Your goal is to execute. Execute, damn it. Get it done, okay? If the spread is low, we buy at market. When we trade SPY, buy at market. If the trade is something like a BKNG, where it's got a huge spread, we put at the mid. We buy at the mid. Guys, you should know all these things, all right? Then focus. There should be no excuses. Right? Focus 100%. One mistake could cost you, $50,000 on the upside. It could also cost you $50,000 because you're still taking the trade even though the entry is not so good. One mistake, guys. You cannot afford not to focus when you're trying to build, especially a smaller size account. So cut all the noise, cut everything, focus. And guess what? Life happens. You have family, you have other things, you have businesses you're running, all that stuff. Okay. Get better. Get better at managing all of them. All right. Get up a little earlier. Go to sleep a little later. Okay. Go work out extra couple of times a week. Get your shit together. All right. Take all trades or take none. So don't come here trying to trade with a coach and be like, well, I like this trade. I don't like this trade. All of my trades, I'm going to put $1,000 and all that kind of stuff. Guys, listen, you're here to learn. All right. If you're going to follow, okay, 100%, ask questions when the market is not moving. If you're going to do what you're supposed to be doing, if you're taking the 13 Market Moves course, you're supposed to be sitting there every day on your calendar. You should be marking the moves. You should be marking the moves on the VIX, the 13 market moves. What's the VIX move? What's the market move on the S&P 500 today? You should be observing that. You should be creating your sequences on your calendar so you understand what sequence it is. And if you're trading with 13 Market Moves Coach, you want to double check the move or what's happening or how to read it until you get a hand of it to be able to do it on your own, then do it. But it starts with you. Go get a calendar today and start drawing the moves, start acknowledging them, start understanding how things are correlated so you can catch some of these pivotal moments in the market. And so when you're ready to sign up, guys, clear all the existing trades. All right. I don't know why you took certain trades yesterday. I'm not going to have time for you to explain me. I'm not going to babysit your trades. Don't be signing up with another coach here and then asking, well, what should I do with this trade? What should I do with this one? I don't know. I don't know what was your strategy when you took that trade. I don't know what was your time frame for doing that trade. I don't know what was the main foundation. What were you looking in the chart when you're taking the trade? What catalyst you were targeting? You're asking me. You should know. You took the trade. So clear all your trades out so we can start fresh and rock. And in final, guys, I would say the difference between a guy that's losing 15K is he thinks he's committed, but he's not. Okay, he thinks he's ready, but he's not. He thinks he already knows some things about trading, but there is a reason why his account at wherever it's at now. There is a reason why he is not taking advantage of the market opportunities because his account is not even set up for trading futures. How can you capture the biggest market moves when they happen in after hours or pre-market, when you don't even have your account set up properly to be able to participate in those market moves? How could you have the patience not to jump in and buy calls on a move that is highly bearish if you don't know the sequences on the VIX, if you don't know the sequences on the dollar, if you're not paying attention to the gold divergence, if you're not paying attention to the sequence on NASDAQ, the sequence on Dow Jones, the sequence on S&P 500. Where would you get your confidence? From listening to the news? These people don't know what the fuck they're talking about. Okay? Their trading time is like way out there. And the reason why most of them that show up on CNBC, for example, they'll tell you, well, a trading horizon is 5 years, because they ain't got a clue what's going to happen tomorrow. They don't have a clue what's going to happen today. They have to have a 5-year time horizon because that's the only way they can possibly get some shit right. So if you want to improve your trading, guys, maybe you should watch this video one more time. Maybe it's a little bit lengthy. I don't care. I try to communicate to you what I think is important. If you're here to learn, I hope you learned something today. And again, this is not for everybody, but the trading contest is still on. We're giving away 100K in Bitcoin. If you trade with 13 Market Moves Coach by the 17th, turn your account from 50K to $1 million. Got some guys well on the way to do that. And the key component that could help you get there is the psychology of trading, guys. So I'd say the most important reason why you should trade with the 13 Market Moves Coach, if maybe you understand a little bit about the charts, maybe you understand a little bit about the moves, maybe you understand, and maybe even your execution is good when you trade on your own, right? But you lack the psychology, you lack the courage to maybe stay with the trade through 3:59 p.m., right? And if you studied the moves, for example, in the last couple of days, like on Thursday, the biggest move came in the last 30 minutes of trading. So if you don't have the perseverance because you're looking, oh my gosh, this contract's going to expire in 30 minutes. Oh my God, I got to get out. You get out at 3:30. By 4 p.m., if you had your positions, you would have been up extra $70,000. But get what? You're already out of them. 30 moves can make this much of a difference. If you stick to the move, you have a chance to beat the market. But your psychology will play mind games with you. The market will play mind games with you guys. So if you really want to improve, okay, sign up to trade with a 13 Market Moves Coach and put as your number one goal, before the chart recognition, before the 13 Market Moves recognition of sequences and the catalysts and correlations, your number one goal is to benefit from understanding your psychology. And for everyone, it's going to be different, but your coach is here to help you point out some things. Because if I'm trading with you, for example, I know I discover certain patterns about you and the way you psychologically respond to some trades, some alerts, some positioning, some losses. All of that could be combined in a very powerful tool that you can use to your advantage just by recognizing what your psychological responses are to certain events and your account progression. And if you understand that very well, that's ultimately the stuff that sets you free. So all of this stuff, guys, that's on you. You got to do that. And you do this, all right, we're going to help you with this. And then you have a chance to be unstoppable. The sky's the limit. 13mmtv.com, guys. Get your courses today. Study the hell out of them. Get off your ass. Get off the couch. Okay, go for a 30-minute run. I mean, damn, go at least for a 10-minute run if you haven't run in 5 years or something. Go do something, all right? And be better prepared for tomorrow. I'll catch you guys in the next video soon. Wish everybody a great trading week ahead. Let's roll.